Greetings, members one and all of the Salivation Nation. Another reason why gold prices continue to rise and silver prices are falling. Let's explore. I was hesitant in that introduction because silver prices are falling by some measures according to the spot price, but in terms of you and I buying it, well, the premiums are pretty high, and the rate of the falling of the silver price sometimes doesn't really reflect, and when you take into account the massive premiums, especially on silver out there. But there are premiums on gold as well. But let's explore this article here from benzinga.com, which provides a little bit of insight. We've actually discussed this to some degree before, but I think there's some numbers here that I think will put things into greater perspective and maybe even give some hope for silver stackers out there. This year has been a strange year on Wall Street, no matter how you look at it. But at least one strange dynamic between the prices of gold and silver actually has a somewhat simple explanation. And it talks about the ETF trust and the gold trust and where they're at, and the ICE shares silver trust and how they've been moved. It has significantly lagged, dropping 16.9% on the year. In fact, the ratio of gold to silver prices is currently around 116. Its highest level in history, dating back to ancient times. I've actually talked about that in a prior video as well. This is according to Data Trek Research co-founder Nicholas Colas. So there's a history lesson here. For hundreds of years, the ratio of gold to silver prices ranged from around 15 to around 20, up to the point the U.S. came off the gold standard in the 1970s. Since that time, the ratio has spiked significantly above 40 several times. Cola said these spikes have typically occurred during periods of economic or geopolitical instability. And that's just it too. For much of the time for America's history, the price of gold was fixed. We had it at $20.67 for a while, and then at $35 an ounce after the confiscation of gold, or the executive order to turn in your gold, and people after that is done, then they raise the price at $35 an ounce for gold. And then we've seen reports, about the Federal Reserve, tally of gold at $42.22 per ounce. And that's still the number on record that they use to value gold for our gold holdings. But nonetheless, since the market has taken over, this ratio has increased significantly above 40 several times. And so that is an interesting thing to see how that has occurred and how that is arranged for spot price. And of course, silver really wasn't fixed in that way. And that's why one of the reasons why I believe we kind of abandoned that standard in 1965. While it may seem strange for gold and silver prices to be heading in opposite directions, Colas said the key to the strange dynamic lies in the demand drivers for both metals. This is key. This is what is the reason. Industrial demand accounts for about 51% of silver. In fact, I've heard that number can be as high as 60%. In 2000, that was just in 2019, and only about 9% of gold demand. That puts things into perspective. We basically knew that, but now these numbers puts it into really a tight kind of a perspective that really does make a difference in how these metals are viewed. At the same time, gold demand is driven much more by investors, who see the metal as a flight to safety trade during times of market turmoil and periods in which investors are fearful of inflation. This should help us understand silver better, because most of us in the stacking community, we have our blinders on when it comes to silver. we understand that most of the devices, especially for those of us who are content creators, that are used to make our videos have silver in them. Most of what we do in life does revolve in some way around silver, especially with regards to technology, even in the biomedical field. And is also the case with copper. The reason why I'm bringing copper into this is because how many of you stack copper? Probably not very many of you. In fact, I have a small stack. There's some that do have a stack of copper, but when we stack copper, we don't look at copper as a hedge against economic instability. We don't stack it, even though it's a monetary metal. Yes, copper is money, but it is much largely recognized as an industrial metal. And it is in fact, we don't even see it as a precious metal, but it certainly does have value. And in a way, that's what silver is being viewed as, especially in the ETF world. But with this newest crisis now that is on our hands, this black swan of the coronavirus, we are now, and essentially, in this coronacopalypse of we're not sure what's going to happen with the economy down the pike. So therefore, there's a lot of people accumulating silver right now, which is essentially reclaiming its role as money and as a hedge against economic instability. That is what you are seeing in the physical price right now. The demand for the metal is, I think, even more than gold right now. But it's being reflected in the physical price, not so much in the paper price. And that's the thing that I've been saying for quite a while, that silver is being seen more and more as a commodity and being reflected in spot price than it was even 5 years ago, I believe. So, given industrial demand has plummeted due to the coronavirus shutdowns and investor demand for gold has jumped due to concerns about the global economy, Kolas said it makes perfect sense why the prices of the two metals are heading in opposite directions. Think about that for a moment here. Industrial demand has plummeted due to the coronavirus shutdowns. However, on the flip side of that, investor demand has skyrocketed. But that offset is not nearly enough to cause a spike in the price of the spot price of silver. The spike we're seeing is on the demand side of the free market in terms of its physical price separating and its futures price separating from spot price. But it's not enough to make it catch up or for that ratio to really close in. You know, right now, if you look at the physical prices between the two metals, it's really somewhere around 85 to 1 right now. 80 or 80, between 80, maybe 90, but it's a lot lower than the actual spot price. So, silver prices won't recover until the global economy and industrial production do. So the gold to silver ratio at all-time highs makes sense, and I do agree with that, unless we have even more demand for physical silver. There's a lot of silver buyers who are teed off. They are mad because of these high premiums, and I know a lot of them, and maybe if you are one of them, who are not buying at these high premiums. And you know what? You're smart not to, in a way. But if the economy does recover, and then we will see the silver prices will go up on that aspect as a commodity. If the economy does not recover, we could very well see spot price of silver go up or the physical price go up because more demand. As gold goes up, silver will follow in the long run, or eventually, as we've noted in prior assessments of recessions, which we are in one now. So here's Benzinga's take. For investors who believe the worst of the COVID-19 crisis is now past and an economic recovery is imminent, the high gold to silver ratio could present an interesting pair trade opportunity. Traders who anticipate the gold to silver ratio will ultimately regress towards a long-term average could consider buying the SLV fund and shorting the GLD fund. Now you're getting into the electronic trading, the exchange traded funds, and that's not my area of expertise, but I know some people who do it and they do fine with it. But I believe that really The key is to accumulate the physical silver, the metal itself. That's right. And I believe that this increased demand in the metal will essentially be what revives silver to its glory days of stacking it as a wealth preserving device. And that is really that's really what it was back at a time when I first started this channel and into the aftermath of the spikes of 2011. People started to see it as such. But we have to always have that balanced view on silver, because I think many of us have blinders on during that time about silver's performance. But we have to understand the duality of silver will prevail, and that is something that we have to keep in mind throughout the offsetting of people's perception of the metal, and then of where it will realize. I think that even if the ratio does tighten, I believe it'll still be seen as a duality, in a dual role, but it's going to take some time. I believe I'm bullish for silver either way. If demand picks up, industrial demand picks up, and that's where well over 50% of it lies, then you will see the prices go up. And but I believe that as you continue to see people buy the metal, the physical form, in coins, rounds, bars, you're going to see increased optimism that the metal is going to be a wealth preserver in the long term. We'll see how it plays out. But gold is another story. It is hoarded. It is accumulated, mostly 9%, as we saw from the video, the numbers. And that is something to behold here, because there's a lot of gold being stacked up, especially by central banks. And if central banks are stacking it up, I believe we should as well. I believe every silver stacker out there, no matter how bullish they are on silver, no matter how undervalued they think it is, it's good to have something that has maintained a relative constant value, and that is gold as the ultimate safe haven. I believe gold is. And I believe it's hard to argue that position, even if you think silver is undervalued at this point. Gold, an amazing metal indeed to accumulate in its various different forms here. And it's something that I believe is incredibly valuable and has been for millennia. And I believe silver has been valuable as well. But it has been on a rocky road, and there's been people that have given up on it and feel perplexed at its performance. But nonetheless, for me, I'm hanging in there with silver. I will never give up on silver because I enjoy the metal and I understand the principles behind what the metal is in that dual nature role. It can only go down so much. It'll never go to zero. You've heard me talk about that, but it's been a long time since I've made that claim. And there's something to it. And by the way, especially when you take into account other things that the markets can have a play on it, like oil went in the negative $37 at one point, but the actual oil itself obviously has much more value than that. Silver, you'll never see that kind of thing happen with it. But nonetheless, we could see dips in the spot price for silver as we go through this economic crisis. We'll find out. But hold fast to your silver. Don't sell it. It's a bad time to sell right now. And continue to press on with stacking as you feel comfortable with regards to premiums, with regards to spot price, and with regards to your own personal financial situation. I hope you enjoyed this video. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.